Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. I'm just going to go over some key plays in the stock market, talk about some politics, but mainly in this video I want to focus on the key stock plays I'm going to be going over. We're going to go over some dollar index stuff and its correlation to the stock market, and what we can anticipate in terms of the dollar and its impacts and everything else. So let's go ahead and review these charts. Okay, so dollar index is a little bit higher. Um, I don't really think this is going to last that long. I mean, yes, you got some issues coming out of Portugal. The politicians don't really know what they're doing, or they know what they should be doing, but they're not doing it because they're afraid they might not be voted back into office. So basically, they're acting on their own best interest rather than the best interest of the country. Fitch downgrades Portugal. Politicians feel much more pressure to figure out something that benefits both the politicians and the people. The people don't want budget cuts. I mean, come on, like really? If they get budget cuts, I mean, the civilians from their standpoint, it's like, well, uh, I don't have a job. I might work in the government, not have a job. There are certain programs that civilians might want. They're not going to have them anymore. Overall, you got a bunch of issues. You're going to have a bunch of budget overhauls, and finance minister quits. Just a mess in Europe right now. But it's not going to be too bad. I think that the euro will eventually strengthen again, and the US dollar will continue to weaken, mainly because of the fact that we got some ridiculous private open market operation. Basically, Ben Bernanke and his crew go ahead and keep on buying treasury bonds. That pretty much pushes treasury bond investors out of the bond market into the stock market or any other areas of the economy. That in turn keeps the bond rate somewhat lower, at least for an extended period of time. That means that corporations are able to borrow money at a lower interest rate. That should also keep the general interest rate on credit cards, mortgages, and other stuff down for a little longer as well. That in turn should encourage inflation, I suppose. Inflation then will continue upon its own feet, as you do have the FHA, which is a home loan agency that does insure mortgages. That's where a lot of homes are. That's how a lot of homes are bought in the USA. And an FHA loan basically grants you a home loan with a 3% down payment. Apparently, people who flip homes can get these FHA homes and sell them within 120 days. Before you couldn't do that, but now you can. And that being said, people and the FHA is just saying, well, guys, we need to stimulate the economy somehow. And yeah, I do agree. Yeah, they're going to stimulate the economy somehow. They're just going to do it the same way they did it, except they're going to make it worse because now you can get more leverage with a smaller down payment to flip a property and sell it, and foreclose properties at that. The main reason why they're doing it is because of the fact that flippers are better at selling properties and making properties more appealing, increasing neighborhood values or whatever, than banks are at doing it, because banks just foreclose and sell it as is. Either way, people still think property investing overall over the longer term is a great investment, great hedge against inflation. Partially the reason why from the 1960s onwards the savings rate has continued going lower as property valuations have continued going higher, mainly because of the fact that there's this whole entire paradigm shift as to how you should save. Saving is about spending money on a mortgage, apparently, instead of saving money inside of a bank account. And since people have seen it work for decades after decades after decades, that's how they hedge against inflation. And I guess since it has continued to work for so long, they're going to keep on doing that. That in turn will continue to put inflation on the economy as you continue that money multiplier effect. How does the money multiplier effect work? Basically, banks lend money, and banks lend money, banks lend money, and banks lend money again, and the deposits keep piling up at different banks. They just lend the other banks money, and overall you just get this huge money multiplier effect. If you guys don't get it, just watch a video on the money multiplier effect, or how money is actually created. Moving on, let's look at the next chart, which is going to be Wells Fargo Corporation. Wells Fargo Corporation has some very interesting technicals. I do want to point out that it does have a pennant pattern. Pennant patterns are very good. They indicate that a breakout above the pennant pattern gives you a great opportunity to the upside. To me personally, since this stock is a $32, $30 stock, I think that there's much more. There's great opportunity if you want to trade long, buy some call options, because you get more money per dollar. Like for every dollar of movement that Wells Fargo gets, you're gonna get more out of it from a call option on Wells Fargo than you would probably out of a $4 or $5 stock like Citigroup. That being said, Citigroup is going to be doing a reverse split. That in turn should make the price substantially higher than what it's at right now, making options more appealing for me. But you know, that's not really the point. Wells Fargo is what I want to focus on right now. Wells Fargo is also trading below value a bit. I mean, the industry average for these type of stocks typically sits at around somewhere around, give or take, a 15 PE ratio or something like that. And Wells Fargo is trading at around, give or take, well, let's see, I think a 12 PE ratio, somewhere around there. Yeah, they're trading at around a forward, give or take. They're trading at like a 14 PE ratio, forward PE ratio at 11 PEs, and the industry average generally sits at around 15.3, and the financial sector average is at around 15.48 for their PE ratio. And you know, if we're going to put a 15 PE ratio on Wells Fargo Company, then we should anticipate a fair value of around $35.11. So basically, this stock should be up about an added $3 or so, which makes it a pretty good and reasonable valuation at that. Alright, moving on, let's look at the next chart, which is going to be Bank of America. Bank of America should be able to find some support at this gap fill area. Yes, they couldn't raise their dividends, they couldn't pass the test, whatever, who cares. Technicals point out that this area is going to be some strong area of support. Once you bounce off it a little bit and try to confirm to the upside, you should see the stock at least trade somewhere around $14.20 and perhaps $14.50. That's the most I'm going to see out of it for this earnings season, I'm guessing. Maybe a little bit more, but like I'm saying, guys, we're not looking for miracles here. We're just looking for a stock that can bounce into the $15 or $14 area. Preferably $15. That in turn will be like a, you know, give or take $2.60 gain. That's a 20% gain right there. So $15 would be a good area to basically anticipate if you're buying into it. And moving on, let's look at the next chart, which is going to be China Advanced Materials. China Advanced Construction Materials Group. So China Advanced Construction Material Group. Ticker symbol is CADC. This stock should be able to find some support at $3.50. This stock is a bit hairy, so don't buy it yet. Just buy it when the best technicals actually appear, and that seems to be around the $3.50 area. If you guys go ahead and look back right here, if you look at this, this tail right here, that's where it has been able to find support before. So likewise, we should anticipate support there again. Just buy it for a short-term opportunity. Put a tight stop below the trend line, and anticipate a trade somewhere at least, you know, maybe $4 or something like that. $4, somewhere in this area. That will give you around 20% in profit. Any more than that would make you a greedy hog, and you will get slaughtered most likely. So anyway, that's where I see with this China Advanced Construction Material Corporation. And also, since we have tsunami issues coming out of Japan, chances are these guys will export a lot of cement to Japan. Who knows? So yeah, just keep that one in mind. Next one is China Southern Airlines. This is a stock that I mentioned in my last video. We have been able to break above the flag pattern, and it has been able to confirm above it for now. We do see some short-term resistance, at least I see some short-term resistance at the 50 and the 100-day moving average. Alright, so just keep these two areas in mind. You want to focus on the $28 and the $25 areas. I think we'll be able to at least trade into those areas, and if we do, that's going to be around 10 to 20% gain in profits there alone. Moving on, let's look at the Direction Financial Bear 3 times. We do have some short-term support at the 200-day moving average on the 60-minute chart. However, I am a little bit skeptical. I do think this stock will go lower, so this makes it a very attractive short. Because if financial stocks go up, this is the type of stock that will go down. If you short this stock, chances are you won't make money, and you're going to go around maybe to the $38 area. The $38 is probably going to be the most you can actually anticipate out of this type of stock. And remember, this stock did have a reverse split. It used to be trading at around $8 per share. Now it's trading at around $38 per share, which is very good because it makes options trading on it much more appealing. You get more volatility per premium. So that being said, you know, if you guys buy a put option on this, just be a little careful. Do acknowledge that there is high risk with options trading. But if you buy put options, chances are you're going to make a lot of money on this play specifically. Moving on, let's look at the next chart, which is going to be Star Scientific. Now, this stock is super overhyped. I do believe this stock will eventually fall of its own weight. This is probably the most unprofitable cigarette company I have ever heard. This company is basically like Philip Morris, basically Marlboro or whatever you call it. And basically, they sell cigarettes that cause less health damage and are better for the environment because they don't smell as bad and blah blah blah. Their whole entire industry behind cigarettes that cause less harm have been deregulated just recently by the FDA, and that's why the stock has gone up by so much. But deregulation doesn't really matter. This company has hardly makes any money. This company makes extremely little money. In fact, they make around $800,000 a year, and they lose around $15 million a year. So this company, it's losing way too much money. I don't really see it being profitable. And not only that, what makes cigarettes cigarettes is the fact that you have a brand label stuck to it that people know and respect and buy into. I mean, they buy the Camel, they buy this, they buy that. And, you know, it's more branding than anything else. And I guess these scientists just don't get it. It doesn't matter how great your supposed product is. If you guys don't know how to advertise it, you're not going to make much money off of it. And in fact, they say something like, oh, well, we don't mind if you guys don't buy it. They advertise that there's extreme health risk, blah, blah, blah. Why would you do that? Yes, I know, everybody knows, like, you know, there's risks with cigarettes. But if you're downplaying your own product, you yourself, then, you know, you're going to lose money. So chances are, I do think this stock is really overbought. Historically speaking, every time it has been overbought like this, it has sold off significantly, and because of that, I just can't buy into it. I really think that this stock is doomed to eventually pull back and fall and burn. That's pretty much it for today, guys. And if you guys have, and I guess I'll have more for you guys in the months and weeks ahead. Just go ahead and if you guys want to use the charting software that I use, please be sure to check out the link below. Take care.